I sold 25% of my junior gold stocks. I did it because by selling 25%, I was able to get the other 75% for free. In other words, I sold off 25% of my upside to eliminate 100% of my downside. That's for the speculative part of my portfolio. The other part of me, Charlotte, has been saving in gold, maintaining liquidity in dollars, but saving in gold since the year 2000. I haven't sold an ounce of physical gold. And in the 25% of my junior gold stocks that I sold, half that money went into gold and 3 senior gold producers. In other words, I bought beta and I sold alpha. I believe, as you and I have discussed before, that looking forward for the next 10 years, the US dollar loses 75% of its purchasing power in real terms, which means I suspect that over 10 years, the gold price, the nominal gold price, the US dollar quoted gold price, will increase to match the decline in purchasing power of the dollar. Does that mean that I think gold will go up threefold in 10 years? Perhaps. Yeah. Nobody's going to get this right. The whole game is to get close. So if you aren't in gold, you need to begin systematically saving in gold. You absolutely have to. You also have to understand the inherent volatility in the gold price. It will not be stair steps to heaven. It will decline 25%, 30%, sometimes 50% in a bull market. You have to be prepared for that. So it's a nuanced question. Answer the second question, I asked the broker to be aggressive. We were in a period 5 weeks ago where there were no asks, there were all bids. And I've learned in the market to do what's easy. If there's no bids, be a bid. If there's no asks, be an ask. And the sector was white hot. There were so many junior financings. And when a company's financing, they're telling you that your cash is worth more than their stock. Well, they should know what their stock is worth. Since they were selling, I decided I would sell some too. But what was most important to me was personal. I've been a heavy investor in the sector since 2020. And I was at a period of time where I could, by selling a quarter of my position, recoup all of my capital and pay the capital gains tax and have the rest for free. I can be very patient, Charlotte, with that remaining 75% because it stands me zero after tax. It was a personalized decision. I believe gold will do well in the next 10 years. And I think the market will go to alpha, which is to say, I think the market will get more speculative. For my own portfolio purposes, I think I wanted to own de-risked beta as opposed to alpha. So I bought gold, Franco-Nevada, Wheaton Precious, and Agnico Eagle. I brought the highest quality companies I could, deliberately going against the market trend, because that's who I am, but also personalizing it. I bought oil because oil's hated. And as you and I have discussed in many of your interviews, the easiest speculative money in the world is buying hate. Buy what the market despises. When that market moves from hated to tolerated, that's the easiest money that you'll ever make as a speculator. And the oil business is roundly hated right now. And it's a great business. I would suspect, listen, I'm old, I've been lucky, I'm rich. My suspicion is that the sell decision on those 3 companies and my gold will be made by my estate. I'm assuming that they will not be sold in my lifetime. 1987 and 2008 answers that question. In a liquidity crisis, in a panic, everything gets sold. Because the investor doesn't make the sell decision, the margin clerk does. And the margin clerk doesn't care about your preference. So in a real sell-off, everything gets sold. What happens is that the policy response to those liquidity crises is always good for gold. It's always money fritting. It's always artificially low interest rate. So gold sells off with everything else, but it comes back much more quickly. The place you start is Exxon. It's the finest oil company in the world. I believe it's selling at 60% of net present value, meaning it's selling at a 40% discount to what it's worth, while paying a 4% dividend. So there's no time value of money problem owning it because you get paid a dividend. I believe that worldwide, the energy industry, the oil industry specifically, is underinvesting in sustaining capital by about $2 billion a day, which means that the production levels that we enjoy today are not going to last, which means the oil price, at least the nominal oil price, goes up. I believe specifically that what Exxon is worth, not what it's selling for, what it's worth will double in the 3-year time frame. So I'm buying a double at a 60% discount or 40% discount to net present value for the finest company in the world. Taking a little more risk, a little. I own Chevron because they're a more efficient refiner and marketer. I own a little bit of Occidental because of proved undeveloped locations, but they got a lousy balance sheet, but I still own it. In the U.S. natural gas business, I own Devon and I own Equitable. But where I'm really adding positions is in Canada. I understand the political risks, which are huge. But as cheap as the U.S. industry is, the Canadian industry is selling at a discount to the U.S. industry. And there's very high quality management teams there and many more proved undeveloped locations. In other words, there's a better growth runway in Canada. Names there, I think you have to own Canadian Natural. You cover the waterfront. I own Suncor because I have no reserve risk in my lifetime. I have no reserve risk in your lifetime at Suncor. I own Freehold Royalty. I own Prairie Sky. I own ARC, which I consider to be the best run oil company in North America. I own Tourmaline. What else do I own? I own Peyto. I own Birchcliff. And that's it. I could go down the quality trail and make more money, but I don't need to. This is a portfolio that I would be surprised if it didn't double or triple in a reasonable time frame. I get paid a ridiculous dividend on that basket of stocks, and they're hated. All I need, we've talked about this for years, Charlotte, all I need to do is buy hate and let that sector move from hated to tolerated. That's the easiest money a speculator could make, financially, not psychologically, but financially. It's interesting that people think that their time preferences matter, because they don't. The oil market doesn't care about your time preference, nor did the gold market. It's only you that cares about your time preference. Everybody wants a short-term sure trade, and those don't exist. So it's like wanting the tooth fairy. What I've learned in 50 years in the business is that a suitable time frame for being right is 5 years. I wish a suitable time was 1 year, but I haven't known any successful one-year investors. I'm perfectly cognizant of the fact that the oil price might go lower and oil stocks might go lower. I've done that a lot of times in my career. What I've learned is that sometimes stuff is cheap enough. When it's cheap enough, you buy it. If you're wrong by a year, that's okay. I don't know if you remember this interview, but years ago, I said that the success in my life was that I preferred to ask myself questions where the answer began with when, not if. Too many people ask themselves questions where the answer begins with if, which is a very risky question. For me, if I'm a year and a half early, but I get a triple or quadruple, that triple or quadruple pays a lot of rent. I have to be right. The arithmetic around oil means I have to be right. I just don't know when, and I don't care. The easy money in uranium has been made. The easy money was when you and I were talking about it at $20, saying it had to go to 60 or 70. It did. So those stocks are up 400%, 500%, okay. The sure money is in front of us. The sure money has to do with the fact that world energy demand is going to double in 25 years. 25 years, world energy demand is going to double. We're going to need all kinds of energy. We're particularly going to need base load power. That's uranium. And we're going to want non-carbon generating power. That's uranium. We're in a structural deficit around uranium today, and we are not shutting down plants that had been scheduled to shut down, which means the deficit gets worse. Meanwhile, we're building new plants like mad. Most importantly, and this is maybe subtle for some listeners, the structure of the uranium market is going away from reference to spot and going to term. And that means that unlike any other commodity in the world, uranium producers are going to be able to lock in production volumes where they understand how much they're going to be able to sell and at what price. There will be a revenue certainty in uranium that doesn't exist in any other commodity in the world, which will lower the cost of capital. There's no other commodity in the world that has that market structure. Understand that Cameco may fall 35%. It may fall 35%, but it's the bellwether for uranium. And uranium is a 15-year no-bagger. I mean, no-brainer. It might not be a no-brainer in 12 months, but 12 months doesn't matter. I mean, it might matter to your listener, but that's because your listener's out of touch with reality. What I like about it is it's indicative of the return to public favor for uranium. 6 years ago in the Biden administration, uranium speculators like me were vilified. They hated us. Now these morons want to subsidize us. Now, I would caution your listeners to know that this is a political promise. Politicians lie when their lips are moving. So this might happen, this might not happen. But the truth is that Westinghouse's technology will become the premier processing technology in the world. Westinghouse will win, which is Brookfield and Cameco. Brookfield has wonderful demonstrated expertise worldwide in project finance, and Cameco is the technology leader in uranium. Whether or not this initiative wins, that combination will win. Don't hold your hat on $80 billion coming from the U.S. government. It might happen, it might not happen. What will happen is that uranium will be an increasingly important part of the energy scene over the next 15 or 20 years, and Westinghouse will win the technology race.